Time for a little buzzkill. Checkout shares of GrubHub posting its worst day ever, down more than 40% after failing to deliver on its earnings results yesterday. The food delivery company also lowering its guidance, blaming what it calls promiscuous diners for spreading the love. So as competition in the food delivery space is only getting more fierce, is the pain just beginning for GrubHub? Guy?
Yes. And I'm saying this with a stock that's down 40%
in a day.
Yeah.
And this is not, I think the market cap of this company somewhere was a $4 billion market. That's not an insignificant company. So I don't know about promiscuous. That's a poor choice of words.
Well, you get the gist of what he's saying.
No, I totally get the gist of it. They have no pathway. I don't know how their margins are going to improve, how their profitability levels are going to improve in the world that we currently live in. I saw Jason Helfstein on with you today.
Yeah.
I watched the network all day long. I love it, and I saw that interview, and he made a point of saying he had to go from wherever he was, he had to totally do a 180
to
under, and that's significant. I think the street's probably still offsides on this name, and I still think there's further room to the downside.
The point with promiscuous diners is that there's no loyalty to any delivery company. There's only loyalty to food arriving at your doorstep.
Exactly. And the restaurant that you go to, it doesn't matter if I've got 4 different delivery apps on my phone. I don't care which one, as long as they get me the food that I want. So there's massive competition, razor thin margins. It's a recipe for disaster. The one name that I was surprised didn't get hit harder on this is Uber, because that's where a lot of the growth from Uber was supposed to come from. Uber Eats. So we know that they don't necessarily have to make money, but I would think that this squeezes those margins as well. Competition's killing them all. Uber, Lyft, Slack all have major competitors in different categories, right? Uber and Lyft, obviously, not only in the moving people around, but also in the delivery world or whatever. So when you look at some of these names, Mel, I just don't understand, when are they going to make money? And how do they show us they're going to be able to make money at some point in time, especially as competition gets bigger and bigger and bigger? So if I'm looking at GrubHub, to Guy's point, 40% trimming doesn't make me interested at all. As a matter of fact, it makes me think that there's a lot more downside at this point.
Yeah, from early 2016, this stock went from $20 to $150, and that was when the valuations of all the private comps were just exploding because of the money that was being put into them, obviously, by the VC community. And I think it's really important to remember, this is a company that is growing sales 25, 30% a year. There is a need for these services. It's just whether or not investors are willing to pay these multiples for them. And that's why we haven't seen DoorDash and Postmates and some of these other guys come public yet. I suspect, and I've been saying this for a while, you're going to see a lot of consolidation here. This is going to have to be a feature of a larger platform that they can absorb the losses. And maybe that looks like an Alphabet because they're interested in the data, or it looks like an Amazon because they're interested in the data. Plug it into something else and figure out how to use it, because to your guys' point, the margins just aren't there to do this as a standalone business.
Amazon's interesting. They tried it.
Yeah, they did, and they got out. They'll probably never get back.